Okay, we'll start. Yeah. So my name is Dan Pan. I'm the founder for Hattie Education, and we really focus on high school and college education. And since right now, some students, Hattie students, are graduating from college or from graduate school, and they are entering workforce, okay? So we thought it would be a great idea for us to host this event in English, since most of our students are in America, to talk about how our younger generation students can invest wisely, okay? So yeah, so please mute, okay, thank you. And in the same time, we do a lot of college counseling. We help students get into top private schools for high school. We also help students apply for colleges and graduate schools and medical schools. So a lot of parents are very concerned about investing for their kids in terms of tuition, how they can afford Ivy League tuition. So this event is also for younger parents that they want to understand that they can start investing for their kids' tuition in 10 years, 15 years, or 18 years. You know, some of the kids probably are just born. So with that said, I will give the microphone to each of you, and based on the order of you joining. And please introduce yourself and your expertise in terms of investment. Okay, so Kelly. Hello, Kelly.
Hello, my name is Kelly Chaudhuri. I am an owner and a partner at Hara Chaudhuri CPAs. I'm here to provide tax guidance on certain types of investments and any questions you might have on the tax benefits of certain strategies.
Okay, that's great. So Kelly and his firm are my company and my personal CPA for over a decade, okay? And Kelly is based in San Diego. I used to live in San Diego for many years, almost 30 years. And Kelly is also from UCLA. You hold an MBA from UCLA, right?
That's correct.
And prior you joining the firm, working on your own firm, you have experience in quite a few major companies, including Ernst Young. Ernst Young was also the firm, the CPA firm, did my tax return when I was an expat in Asia many years ago. So great company. So thank you, Kelly, for your time. And next one will be Mr. Tang. And Mr. Tang, go ahead.
Hi everyone. My name is Guojing Chen. Sorry, I'm traveling in Beijing now, so probably there are going to be some time lag. So I have been a commodity trader in the past decade. Before I joined Pionex.com as a specialist in trading crypto. And my expertise is mainly in market making for options, especially in commodities and in all kind of cryptocurrencies. So that's basically my background. Yeah, I got a PhD in mathematics from University of Maryland College Park a couple of years back. And after graduation, I went to firms like Lehman Brothers, and then went to Morgan Stanley to trade options on derivatives. And then 2017, I went to Huatai Security to start the one subsidiary to trade options and other type of derivatives in commodities. And 2021, because of COVID, I moved back to US and started Pionex.us, which is basically a licensed crypto exchange. And yeah, that's pretty much my background.
Thank you, Mr. Tan, for your valuable time. I know you are on travel. You're in with Singapore and now in Hong Kong, Beijing. Thank you so much for logging in on Sunday morning. Thank you. Thank you.
You're welcome.
Thank you. Next one is Geoffrey. Go ahead, Geoffrey.
Hi, everyone. My name is Geoffrey. I come from Chongqing, China. I have a background in physics and computer sciences. In my early years of employment, I worked as a software engineer for mobile phone companies. But since recent years, I would like to say since 2014, I begin to explore. I realized that working for a company probably won't get where I want to be. So I begin to explore investments area. I began to invest in real estate, and also recently in financial products. Basically, for financial products that offers protections for people's life. So yeah, I'm currently basically life insurance agent in addition to real estate investors as well.
Thank you, Geoffrey. Geoffrey is also based in San Diego, my friends for many years. And Geoffrey works with private investors for many years to raise funds and invest in buildings for development, commercial or residential. And now he's also helping folks with cash valued life insurance. Thank you, Geoffrey, for your time. And our only lady, well, I'm the lady as well as a panel speaker, June. And go ahead, June. Can you hear? Can we hear you, June?
Okay, here you go. Can you hear me right now? Yes.
Yes.
Okay.
Yes.
Yeah. Hi, everyone. My name is June. I am real estate broker. I mainly focus on Southern California, especially in Greater San Diego area. I have actively worked on real estate field since 2011. Yeah.
Okay, thank you, June. Yeah, June is a real estate broker and agent with high integrity and professionalism. And last year, I think you did over 20 million sales. So congratulations, June, and thank you for your time.
Thank you.
Okay, so this is all the introduction, and all of you are in your own area for investment, okay? So what we are here is not promoting one vehicle over the other. We just want to discuss about it. So start with commodities, cryptos, stock. So Mr. Tang, you have a lot of experience in that. For younger students, younger generation, we just, start having a pretty good job, have a little bit of savings. Sometimes our parents can help us. Do you think we should invest in stocks and commodities and options and crypto? So the floor is yours.
Well, the answer is yes. Actually, well, one principle for investment is always try to diversify your exposure, your portfolio, right? Instead of just overly concentrate in one special sector, especially considering the market and macro environment. There are a lot of going on, and some industry is thriving, and some industry is fading. So, of course, people have different angles looking at the development of various sectors. For example, the recent AI development generated a lot of interest in that particular sector, but you can easily find a very good opportunity to get a good return. But in the meanwhile, get an overexposure to this particular sector, you might find yourself investing some instrument overly overpriced. Okay? That's the reason you always want to look at some other sector to mitigate this type of risk. For example, commodity as one particular sector always offer very good balancing or diversification to the overall risk of asset market. So mainly because the correlation between commodities and stock and fixed income products are quite low. So based on portfolio series, all kind of theory you can find in a textbook or some other books, the lower correlation of one sector to another one, the overall risk of your portfolio can be low. So that's the reason why you want to use commodity or some other products to diversify the risk. And I would like to point out another phenomenon which is happening now, right? For people interested in crypto, you can see there are a lot of legislation just just passed in the last few days. And there's some actions from regulators here in this country. For example, SEC, the Security Exchange Commission, right, just recently approved 2 ETFs on cryptocurrency. So so the institutional investor and the individual investor, they can legally to purchase the crypto products now. And the crypto is like another very similar to commodity. It offers great diversification effect to your overall portfolio to mitigate the overall concentration risk, and in the meanwhile can hopefully get a very good return for your overall portfolio. So back to your question, Danny, yes, you want to invest in those products, commodity, fixed income, equity in stock, or some emerging products like cryptocurrencies to get good return, and in the meanwhile to lower your risk.
Okay.
Yeah.
So those are all the liquidable investment. So here, unless you have Roth IRA or IRA, I believe every time you buy and sell something, after you sell something, you have to pay tax, right? So Kelly, what is, if in the regular trading account, most of us in California, so I know there's a long-term capital gain. What's the rate now? And what's the number of years, like 12 months or 36? Go ahead. Mm-hmm.
Yeah, so there's when you trade in these types of assets, it's called capital gains and losses, capital assets. So capital assets are generally assets that you buy with the intent of going up, but sometimes they go down. So with any capital asset, it's treated as capital gains. So short-term capital gains is if you buy the asset and sell it within 12 months. If you hold it longer than 12 months, it's called a long-term capital gain. So short-term capital gains are taxed just like your income is taxed. So like if you're making income from your job or somewhere else, then it will be taxed at the same rate. But if you can get to 12 months or longer holding period for your capital assets, then you can get long-term capital gains treatment. And for federal purposes, that's 20% tax rate fixed. And then there's also a 3.8% net investment tax that has been added in recent years. So it's like 23.8. And then for California, it's still taxed at your ordinary tax rates. So
okay.
The main goal is, if you want to be tax advantaged, you want to try to hold any investment you make for at least 12 months. Okay.
So I see. So with that said, just the most people's tax, like regular California, maybe tax at 8, 9, high income tax. What's the highest California income bracket now? 13 or 14?
Yeah, it's actually 9.3, I believe, and then you add another piece to get to 13.3. Yeah. Mm-hmm.
Yes. So it's kind of sad, right? So you sell something, base 13, if high income goes to California, and then 23 something goes to federal. Okay. Right. So that's the downside. So Ms. Tang, if we trade the stocks and stuff, it's the best we trading IRA, right? In Roth IRA.
Yes. Mm-hmm. Yes, to lower the tax effect or the impact of the tax on your portfolio return.
Okay. We'll come back and all this tax, like IRA and the Roth, to Kelly a little bit later. Okay. So Geoffery, and I know you sell life insurance, and I also bought it, cash value life insurance, because the biggest selling point is tax-free. Okay, not only for protection after people die, but to become a retirement income you get out there might be tax-free, or long-term care tax-free. So what's the catch? Can you explain that a little bit for the benefit of cash valued life insurance, Geoffery?
Okay, yeah. In addition to the tax-free growth part, I would like to emphasize a few other benefits for life insurance first. We all know that things happens, right? We buy all kinds of insurances, like auto insurance, mortgage insurance, our home insurances. But most of the cases we forgot, or we don't buy insurance for the most valuable thing of us. That's our life, right? So, but life insurance, first of all, it's I think the biggest advantage is that it's a leveraged protection that everyone needs. We have seen many cases that people pass away prematurely or too early without the protection, that leaves their loved ones and their families in a very bad situation. That's the first reason I would recommend. I think it should be a very fundamental asset allocation for every family in the US. Secondly,
Okay.
yeah, secondly, people don't have to die to use for those more moderate life insurance. Like you said, it has not just has cash value, it also has like living benefits, such as when people get sick, the triggering living benefits are like terminal illness, chronic illness, and critical illness and critical injuries. All those events could trigger the claim of the benefits. And after that, like you said, it's the new insurance has cash value, and because of the cash value, then you can you have the opportunity to do investments using this life insurance, and the investments has it's not like usual investments. It is protection investment. It has basically a floor protection. That means your cash value will never go down when the market goes down. If you compare the growth part by with the money you put in bank, it has much more potential. It has much better returns. Averagely speaking, you could get up to like 7% annual return for a long time.
Okay.
Yeah.
Okay, go ahead. What, anything to say? Sorry to interrupt. Go ahead, Geoffrey.
Sure.
Oh, you want to take a break,
Yeah.
and we're gonna come back to you. Is that okay?
Actually, a few more sentences.
Okay.
Also, you have the freedom of getting money out of the policy or put the money in when you have the money that's not used for anything else. And based on all, it can be converted into a lifetime retirement income. So
Okay.
all of those incomes, like you said, it's potentially tax-free. So that's what I see the value of this life insurance.
Okay, so I just want to summarize very quick, okay? So for Mr. Tang, commodity and anything, Roth IRA, everybody knows, but as an investment vehicle, and it's liquidable, and if it's in regular account, taxable, okay? And however, we can talk about it, it's self-managed, I pick my own stock or somebody else pick. But for Geoffrey's life insurance, sounds like there's a fund you can pick, but majority are managed by a larger company, right? It's not like I buy Tesla today, sell another Apple tomorrow, right? So it's more, to me, it's more managed, but for the stock and the crypto, it's more, a little bit more freedom. I can buy the things, individual stock and individual commodity, right?
Yeah, it's actually called predicting strategies that are tied with some indexes.
Okay. So somebody is managing it, and
Actually,
Mr. Tang,
the insurance company is managing
it. Yes.
Yeah.
So Mr. Tang, if I were investing, with stock, like crypto, I can do myself. I can hand over the money to somebody like you, right? There are two vehicles.
Well, yes, we're a licensed fund manager here in the States, but for other sector, right? For example, equity and the fixed income, you can always find a professional fund manager to take care of all those investment for you.
Okay. Yeah. My theory here is I always want a professional people to do the professional things. So so that's why one of the reason I work with Kelly and his firm, a lot of people do their own tax. I don't, okay? Because there it's just too complicated for me. Okay, so that's good. So now I think the most audience know more about is everybody, not everybody, a lot of people own a home. And Junying, real estate, like especially for Chinese Americans, especially also Chinese in China too, and we're familiarized with real estate. So now we're talking about here for younger generation. Oh my gosh, San Diego home so expensive, Bay Area as well. So for young student, parents maybe help out with 100K, maybe have 50K savings, say 150K or 100K. How can we invest in real estate, Junying?
Okay, yeah, that's a good question, then. So while investing in real estate, it typically requires a significant amount of capital because a young graduate, maybe they don't have like so much funds at hand, right? Yeah, but we still have several strategies that young graduates, they can like consider to start investing in real estate. So first, I think they need to save and budget. Begin by adopting a disciplined approach to saving money and creating a budget by cutting unnecessary expense and saving a portion of your income. Because sometimes young generation, young people, they like expense money to like have some fashion things, right? So if they can save money, so they can gradually accumulate the capital needed to invest in real estate. Then second point, maybe they can partner with others and consider partnering with like their friends or family members who have the financial means to invest in real estate. Pooling resources can help you invest in properties that might be out of reach individually. And third, maybe they can do like house hacking. You can purchase a property and rent out a portion of it to generate rental income. For example, they can consider buying a multifamily or multiple room properties, living in one or two rooms and rent out the others to cover a portion or all of your mortgage expenses. Yeah, and also they also can start small, begin by investing in smaller, more affordable properties such as condos, townhouse, or small single-family homes. Over time, as your financial situation improves, maybe you can consider scaling up your real estate investments.
Okay.
Yes, that's a few points. Yeah.
Okay, that's great. Okay, so I heard about it. Now I'm going to talk to Kelly. Okay, you're the center point of, because they're all tax implications. I heard if a young student graduate, say from USC or UC Berkeley, UCLA, has about 100K, less than 100K. Okay, not everybody makes over 6 figures. And if that person has a rental property, they could write off up to $25,000 against W-2, including depreciation. Is that true?
Well, are you talking about a standard deduction, or are you talking about related to real estate?
Related to the real estate as a rental property for an owner that makes less than 100K.
You can deduct up to, if it's an investment property, you can deduct up to the investment gains that you have. Like, so if you have rental income that comes from the investment property, you can write off up to the gains, because it's considered a passive activity, gain and loss. So you can deduct all the way up to what you made in the property.
How about depreciation?
Yeah, depreciation is part of that also. So you can depreciate the property over 27 years, I believe, if it's a residential, and that depreciation is though limited by the investment income that you make, and it's called suspended. And then when you make more money, you can unlock those depreciations as well.
Okay, so So here's the number game, right? If we buy a house and the tax and all this cost, not including depreciation, wash against the rental property. So there's a set of the depreciation. Can I use the depreciation to write against my income, my wage?
You can do it in one case. There's something called short-term rentals. So
Okay.
if you set up like an Airbnb type of rental, then you can call it not a passive activity, it's an active activity, and there's certain rules around it. And only in that case can you write it off against your W-2 wages.
Okay, okay. That seems complicated. So anybody who wants to invest in real estate should talk to June and also Kelly to understand the implication. Okay, that's great. So now next question is timing for investment. Mr. Tang, the S&P has gone up a lot, okay? And the crypto has gone down a lot, okay? Should I sell my S&P fund or stocks and go buy crypto at this point? Because I think for younger generation, 10K, 50K, even 1,000, there's a lot of flexibility of investing in liquidable assets like stock and option, this and that. Go ahead.
But then if you ask my personal opinion,
Yes.
instead of investment recommendation, I would say no, don't dump your investment in S&P, and you can build up your exposure or investment in crypto, but don't sell S&P or never sell USA. That would be my recommendation. You might put a little bit more weight in terms of investing in stocks. You can probably take a look at like some growing sector like AI related stock, and reduce some exposure to some fading industry. But having some exposure to equity is always a good idea to boost the overall return. And whether we should look at some other new products like cryptocurrency, that really depends on your personal risk tolerance and trading preference. One information I can share with you guys, the audience, is recently it seems like we're going to pass some major legislation, some law related to crypto industry, and to enhance the transparency and the rules and the orders of this industry. So individual investor gonna be faced with less risk of so-called counterparty risk, and gonna have more and safer trading opportunity, trading Bitcoin and some other type of cryptocurrency. And also, as I mentioned at the beginning, two ETF just recently got approved by SEC to trade here on the stock market. So that's gonna pave the way for individual investor to trade Bitcoin. So that alone can serve as a very strong reason for the upside potential of cryptocurrency, because one hurdle for this new industry to grow in the last couple of years is because it's a little liquidity in this industry. And but if in the future more investors come into trading crypto, we can easily see the price go up quite significantly. So overall, back to your question, do we want to keep the exposure in S&P or US stocks? Yes. And do we want to take a look at the cryptocurrency as a new type of investment vehicle? Yes, but I would recommend you guys, the audience, to read some research paper about the industry, get familiar with that, and to take a look at the fundamental and check all the factors contributing to upside or downside movement of the price. I think that's going to be a wise things to do for not only our crypto, for any type of investment.
Okay, sounds like doing what you are doing. We need either a mathematics in PhD, very good with quantitative, calculation or modeling. And I'm in Berkeley, and my father was a math professor, and actually he collaborated with SS Chen at Berkeley. And, you know, SS Chen has a student called Jim Simon, has the quant fund called Renaissance, right?
Yes.
So that's based on modeling. So I really admired all the mathematicians. However, many of us are not mathematicians. So we are trading based on emotions. And many of us, we can't do this. And many people I talk to, I like asking doctors, they made a lot of money. Did you make any money in stock market? They said, no, not really. So it's like 10% people is making money, 90% is, you know, losing money. Is that true? So this is the one last question before I go to Geoffery. Yeah. People don't have discipline.
Well, I think, okay, back to your second question. Yes, most of individual investors, they lose money. And actually, the more disheartening fact is most of the institutional investors, they lose money. And one statistics shows 70% of the fund manager in this country or globally, actually, they cannot even beat the benchmark. And not to mention the individual investor, right? One statistic I read 1 year back is 95% of individual investors, they lose money in stock market. So purely based on statistics, yes, most of the investors lose money, but that doesn't mean actually excellent or good investors, they cannot make money, right? And there's still very good opportunity for institutional or professional fund manager and some pretty intelligent or like investment savvy individual investor to make money in equity or fixed income or crypto, right? So yeah, that's basically a fact. How we can ramificate some idea from this fact is really that alone can be a big topic, right? And then let's go to your first question. Shall people trade on emotion? A lot of people say never trade on emotion, right? But I would have different. I would say trade on emotion is fun, right? As long as you don't do that for your saving, right? To accumulate your saving. This is like a gambling in a casino is fun, right? But you don't expect to build your wealth based on gambling, right? Very few people in the world can do that. So if we talk about trading for fun, you can do whatever you want as long as it's legal, right? As long as your risk is capped, meaning you can only lose money that you can afford to lose. But if we talk about some long-term investment, yes, you have to set up some pretty strong discipline, right? How much you want to earn in a certain time horizon, and what's your risk appetite, meaning what's your limit of loss, right? And what's the goal for saving or investment, whether it's about to saving for college tuition, for wedding ceremony, or for your retirement. You have to be very specific about your investment goal, because that might lead to different investment decisions, right? So trading savvy or trading smartly is one, or trading following some basic principle is, I think that's general, is a good idea for building a good result over the long horizon, right? And whether we need always need a master or a PhD in mathematics to do good trade, no. I think because there's all different types of trade, right? For example, macro trading is basically trading on fundamentals alone, and trading less frequently than professional traders or high frequency traders. You can still make a lot of money as long as you bet on the right direction, right? As long as you understand what you trade correctly. So that requires math, yes, a bit, but more importantly, it requires some very thorough, comprehensive understanding of all the fundamentals factor, all those technical factors contributing to the upside and downside move of the price. So overall, as long as you know what you're doing, as long as you capture the big majority of the factors, causing the price to move, you can still make money. A lot of people, including both institutional and individual investors, they successfully achieve that. Of course, for folks like Simon, right, or many professional traders in Wall Street or investment world, they have some pretty sophisticated background, right? Not just the mathematics or physics engineer. So for those folks, they understand the modeling better. They can build a very sophisticated model to not only to execute some trading strategy, but also to detect some trading signal, meaning before the price move up, they can find some indicator showing, oh, the price is coming up in the next few hours or second. And vice versa, when the price comes down, they might find some statistic indicator showing that that's what is coming. Those require some pretty sophisticated understanding of math, modeling, coding, and risk management, and also require some understanding of all kind of instrument that's available out there in the market to trade on, right? For example, we can have, if you want to have build exposure in a cryptocurrency or in a stock, you can trade spot, meaning you can buy or sell the underlying, the stock, for example, NVIDIA stock, just in the spot market. And there are a lot of, there's much wider instrument you can choose to build some similar exposure. For example, you can buy options on NVIDIA's stock to build a so-called long position to benefit the upside move of the price. You can even take a look at some other type of instrument, like so-called derivatives, build some different direction of the exposure. For example, if you think certain stock is overpriced and you want to take advantage of the potential downside move of the price, right? You can buy put option, right? You can short futures written on those so-called underlying. So there is some bazillion different type of instrument for people to trade on to get a different type of exposure. Of course, the requirement of the understanding of the risk and upside and downside of those instrument is that there's there, right? Otherwise, you might get some exposure that you don't want to get. So that's another angle you about the good trading decisions. Yeah, I don't want to take too much of your time, but this all the three questions Danny you asked is actually we can touch the surface, but if you want to have a deeper understanding, okay, what kind of background we need to have, or what kind of a pre-requirement for a good trade, or some other various like a risk management side of the investment, right? We can have a different separate discussion.
Okay. Sounds like it's very complicated. Go ahead.
Yeah, oh, Dan, sorry. I think I know what you were asking about before. So let me clarify one thing. Yeah, there is if you make less than $100,000 modified adjusted gross income for real estate, and you have real estate, and you actively participate in the activity of real estate, then you can take a $25,000 deduction with your losses. And if you make between 100 and 150,000, you can take half of that. But after 150,000, there's no more. It's not allowed anymore. So there is a special deduction allowance. I think that's what you're referring to, right? Before.
That's my understanding. Yeah. So I think this may be a good vehicle for kids that not making over 100K, and if they're actively managing something, right?
Right. Absolutely. Okay. You have to, but active participation is a very stringent rule requirement. So you have to read up to see what you have to do to qualify for that. So you have to really be involved in the management of the property.
Okay, active. Okay, thank you. So thank you, Mr. Tang, for answering my questions. So just in summary, my understanding is trading stocks and using different type of vehicles and to mitigate the risk or to boost the return is very complicated. And I think a lot of people have a little bit of money, either from their parents or from their earning, easily go jumping in the stock market. Okay, I did myself as well, and I know it's not easy. So I think just by what Mr. Tang shared with us, and all the young students, just let you know, buying and trading stock is not easy. It's not something that a lot of people can do. And it's a 70%, 75% fund manager even losing money. Okay, so now I know we have a little bit of saving and we want to put in Roth IRA, we want to put in IRA. So Kelly, what is the requirement for Roth IRA and what IRA? Can you explain that? And then I will jump to Geoffery.
Roth IRA and what, and traditional IRA?
Yes.
Yeah, so traditional IRA, there's certain limits. So I have to get a table to tell you the exact limits, but the traditional IRA lets you put in tax deferred income from your paycheck or any sort of source of income that you have. and you put the money into what's called a independent retirement account or IRA. And so then that allows you to put pre-tax money in, and then it grows tax deferred. There's no tax on any of the capital gains until after you reach a certain age, or when you're going to pull it out over, I think 59.5 is the beginning part where you can start pulling it out. And then when you pull it out, then you pay your tax at the current tax rate plus any capital gains, and that's when it comes out. And then a Roth IRA is a little bit different in that it lets you put in fully taxed money up front and lets it grow tax-free. And then when you pull it out, the whole thing is tax-free. But there's a more stringent requirement on the Roth IRA, like you can put in less, and also you can only make a certain amount. If you make a certain amount above that, then you're not allowed to put into a Roth IRA unless you do something called a backdoor Roth, which is a little complicated strategy. But if you have any questions on that, we can get into it. But there's definitely some income limitations and contribution limitations, and it depends on your filing status and income and all these things. So, but generally speaking, traditional IRA lets you put in pre-tax money, and then when you pull it out, it's taxed. And Roth IRA lets you put in fully taxed money, and when you pull it out, it's tax-free.
Sounds like Roth IRA is great. So question, can I put, as a young graduate, can I put in Roth IRA and RIA same year, or can only choose one?
Yeah, you can do both. Yeah, you can do both, because one is pre-tax, so there's a limit on the pre-tax, and then you can do a Roth IRA for the maximum amount, which is fully taxed.
Okay, that's great. Okay, so young students, if you have extra money, sounds like we need to put into Roth IRA or IRA. And then the question is, what do I buy, right? So now life insurance, right? So my son, both my kids have cash valued life insurance. When they're young, it requires very little, not much investment. So Geoffrey, you mean young people, they don't think about protection, okay? Why people buy car insurance, buy house insurance? Because it's required by mortgage companies. Car insurance is required. And the life insurance, people don't think about it. People don't think about they're dying, or they will die. Everybody will die, but people don't think about it, especially for young kids. So why do young kids buy cash value life insurance, Geoffrey? And usually what type of, how much money? I know buying a house, we talk about with Junying, it takes a lot of money. It sounds like Junying, you're in the wrong floor here because we're talking young kids. But is that the case? And the stock, I can spend $100 to buy something, right? Okay. How about life insurance? What kind of investment we're talking about for a 22-year-old?
Okay. So for young kids, especially for new graduates, I know their annual income might be limited, right? However, for young graduates, they have a biggest advantage, or their time leverage. So they can have their money, doesn't matter, it's it's a few thousands or just a few $100 to compound year after year for so many years. If we are talking about life policy, life insurance, actually the requirements, because the kids are young, so their cost is very low. That's another advantage for them. For example, most of the college kids, get out of college, begin to work at the age of, either 21 or 22, around that age, right? Although if they want to start a policy of $1 million protection, they could start, if it's a boy, a male, at the age of 21, they could start $1 million policy for as little as $400 per month. So it really does not require that much of money. If it's for a girl, then the girl could just start a $1 million policy for just as little as $300 per month. And if they start this policy as early as possible, their cash value, because their cost is so low, their cash value could, compound to even with such a little money, could compound to $1 million when they are getting to their retirement age. So it's not that hard, but the most important thing is to start a disciplined investing as early as possible to fully take advantage of the time leverage they have.
Okay, that's great. Yeah, I think this also relates to younger parents. And that's another topic. It's more between Mr. Tang's, investment versus your investment for saving tuition, right? Do you put in 529, the stock fund, or do you buy IUL, life, cash value life insurance after 18 years? What is the benefit? And it's a long topic, but it sounds like I could put that a few $100s for the tuition for life insurance for a newborn, or I could buy 529, right?
Yes.
Okay. So there's one difference here. So as there are some parents want a financial aid. So I know financial aid does not count life insurance as an asset, right?
So are you asking me or?
I'm asking you.
Okay. Yeah. So this I would love to spend a little bit more time on this. I think most of the parents know that there is 529 plan. That's the educational plan. Basically, parents can save their after-tax dollars for their educational purposes, for their kids' educational purposes. However, as you mentioned, there is another plan. I think most of the people don't know. Actually, it's called 7702 plan. It's related to the life insurance policies. I would like to, first, compare these two plans side by side first.
Yeah, I don't think we have time, Geoffrey.
Okay.
So I need to, because I told Ms. Tan we're gonna finish within an hour, maybe extend a few minutes because we start a few minutes late. Okay, so you pause there. Basically, you're saying the 529 versus the 7 something. What's the number again?
7702.
7702. Okay,
Yes.
You can both invest, and sounds like there are different implications.
Yes.
Also, we're gonna. Okay, sounds good. We're gonna pause. 529, I know because we do a lot of financial aid, help parents, okay? And we work with a CPA, Kelly's firm, to help with financial aid. I know 529 is counted on as your assets. 77, whatever the life insurance may not be counted as assets. That's all I know, okay? Is that okay? That's right. Okay, now question for Junying. Okay, now we're going back to the investment for the tuition, okay? So if I have a house and then I live in, sounds like it not be part of the financial aid, but investment home counts, right, Junying? Do you know?
Can you say it again?
Investment home is counted as an assets, right?
Yes, it is.
Okay. But do we still want to buy a house? So talk about San Diego. Give me a number, okay? So I moved there, how many years? I was there in 1995. And do you ballpark know 1995? A townhouse or a condo costs near UCSD, how much it cost? Do you know that time? And versus, just tell me how much a regular 2-bedroom a condo costs near UCSD right now.
So for 2-bedroom, 2-bathroom apartment next to UCSD right now, it costs around $800,000.
Okay. So I remember 1997, my brother came to America and to pursue his PhD at MIT. So that summer, and I was gonna rent, and then I found out maybe cheaper to buy. So you guys know at that time, 1997, a condo near UCSD costs about $100K. So 100K. So it's
Mhm.
how many times? Like 8 times? Went up,
Yes,
right?
more than 8 times. Yes.
Yes,
Mhm.
8 to 9 times. Plus, if you buy cash, there will be also what's called if I bought apartment and a condo near UCSD, 100K, 97, say 25 years ago, make it easy, okay? And then I forgot when that time I was renting, maybe the rent was about $800 or $1,000. So a 2-bedroom, how much is renting now?
It's between $3,000 to $3,500 per month. Yes.
Okay. So I'm not here doing the math, but it's more like a math game. You buy a house, apartment, rent up to 9 times, then you also the rent increase 3 times, blah blah blah, and you can calculate it. Somebody, Kelly, you're better than me to calculate it. What is the aggregated return? Sounds like buying home is a very good investment if we did it 25 years ago. But Junying, what do you think? Will San Diego price, California price keep going up like past 20 years?
For the past 20 years, especially during the pandemic, like 2 to 3 years, San Diego's real estate price is jumped a lot. But in the future, in next a few years, I'm not sure. But in the long term, real estate it's always go up. So
Okay.
yeah.
Okay. Sounds to me, real estate is also a very good investment. It sounds like it's a supply and demand issue, right?
Yes, and also sometimes you can can hedge inflation.
Okay, hedge inflation. And also the other part of is aging population. We live longer now, and people keep moving to America. So just same as Mr. Tang, don't give up investing in US, right?
No, never.
Yeah,
No.
never. Always have
Best
confidence.
marketing in the whole world. Yeah.
Okay, that's great. Yeah, sounds like a real estate. But life insurance, they also, a lot of them are investing in US fund as well. Okay, that's great. So we have a few minutes, and I want to give the floor to Kelly. Kelly, you want to talk a little bit about just a very quick summary of pros and cons in terms of tax. I don't think anybody can do investment well without knowing the tax implication. So I think tax is very, very, very important piece of the good investment.
Yeah, absolutely. So, the name of the game with tax is you're always going to owe tax on the money that you make, but the overall goal is to defer the tax as long as possible. So if you can get into strategic vehicles that are tax havens in the sense that you don't have to pay tax today on your gains and you can push it out to the distant future, that's going to help you the best because it's a time value of money equation. Money that you have in your pocket today that is not going to tax, you can build on that, right, over time, right? So if you pay the tax out today, then you can't use it to invest, you can't use it to do anything, so it's bad. So all the tax strategies that are not to avoid tax, really, but it's more to defer tax or to reduce that tax as much as possible as far as the rate. So things like long-term capital gains is going to reduce your tax rate in the short term. Things like IRAs are going to defer your tax. If you have strategic investments, like real estate actually has some of the best tax treatment as far as taking non-cash things like depreciation and offsetting cash types income like rent. So that's really good. Life insurance is a very good vehicle for tax treatment because number one, the government has said that within a life insurance policy, the cash value that accumulates is actually tax-free. And then if upon a death, the death benefit to a beneficiary is in many times tax-free as well. So those are like ways to defer that tax and maybe even avoid some of that tax in the future. So yeah, so there's many strategies, but sometimes your overall real rate of return gets affected by your tax. And if you think about taxes along with your investment strategy, that's going to maximize your overall real rate of return.
Thank you. Yeah, that's what I've learned. I'm a bit older than most of young students, right? My kids are all the younger generations age, and looking back, I felt every time we invest, if you keep the tax implication in mind, that really help. And I think Bill Gates, when he became #1, he was like the richest person in the world. He got interviewed, and his answer is that you need to understand US tax laws. Okay, so that's why we have Kelly here. Okay, that's great. So we have just a few minutes, and thank you all. I want to open up the floor to any audience. Any questions for any of them? No question at all? We actually have a good turnaround. So no question at all? Okay. So so I was going to summarize a little bit. It sounds like for a lot of people are buying and trading stocks because it's very easy. But just based on what I learned with Mr. Tang, sounds like we need to study a little bit, understanding a little bit before we start doing trading, right? Buying stocks, right, Mr. Tang?
Yeah. Yes. Yes.
Yes.
Yeah.
Yes. Yeah. So many people will say, hey, I heard a good tip. Okay, they just jump in. And then they're going down, and oh my gosh, it's going down. They sell it, right? So this is not good. So when you're young, think about this meeting. Don't buy and sell based on tip, based on emotion. Do some work, okay? You go to college, you study hard to get that A. Mr. Tang, I think students need to study before they invest, right?
Well, depending on you want to trade for fun or trade for making money, right?
We're talking about trade for making money.
Yes, then, well, you don't have to get a PhD or a degree in trading. Well, but you definitely can take some courses to better the trading skill.
Yeah. So you need to study, right? It doesn't matter long-term, short-term. You need to study, right?
Yes. But think about it, right? Because trading or investment is basically a game against the smartest people in the whole world, right? So you have to have some you have to equip either with good trading skill or good information. Actually, most of the time, both, right? Good trading, good information analysis and trading skills. Yes.
Okay. So I always joke with people, you need to have a big heart. Like when you start losing money, you get like depressed, or your heartbeat goes up. Okay, so anyway, hats off to you, Mr. Tang. You are in that industry. I could not be in that industry. I don't want to think about investment. I just want to live my life. So I would tend to hand the money to professionals. It's very hard. Yeah. So, okay. So, and Geoffrey, and I learned that you can invest, young kids can invest $300-400 and then still can build a very good retirement portfolio. So life insurance, it's like to a lot of people, it can be very, very, very negative. When we hear about life insurance, we just run away. Okay. I have some agents chasing after me for many, many years. And I never really click until I look at different products. So I just, you want to say something, there are different products, different practice that you need to find a professional to work with you, right? For this product to work, right?
Yeah, I think that's basically because people don't know much about life insurance. And also it's probably because the field, some of the practices that people done in the field, some people put their own interests in front of their clients' interests. They don't sell right product to their clients. But nowadays, the product has changed a lot. We can customize the product to fit our clients' needs. And as I said, it has a lot of more features, and you have many more use cases for life insurance these days. So I would encourage our audience today to open your mind and to dive into it and at least know what the current days life insurance are actually, so that you might have a better or a different view for life insurance today.
Okay. Yeah, that's great. So to me, basically, I felt life insurance or Ms. Tang's all this stock products, they're very similar. Okay. But the difference is life insurance managed care. Big companies are doing this for us, and there's a portion of it goes against the premium in case something happens. So to me, the moment I had my kids, even the moment he was born, I went to buy a policy because I want to protect for the younger kids, right? For my kids. So if the kids that right now, 22-year-old, they're not married, they have a policy, they can carry over when they get married, they have kids and they don't have to buy it and the premium kept very low. But anyway, this is a lot to it. And I really agree with you. Professionalism, integrity, and putting clients' interest is much more important than agents' interest. So that's why people get worried because they feel they're dealing with bad agents. Okay, so anyway, that's enough about that. And then one more question, and maybe for Mr. Tang, should I get my where is the good place to rest cash before putting in stock market? We all have the same problem. A good problem.
Oh, that's a very big. That's a very interesting question. I think money market instrument is always the most liquid sector, right? So meaning you can always get a cash out of your investment whenever you want. But the downside is the return is very low. Of course, you can also invest in some cash equivalent products, right, which has very good liquidity and some better yield. You can look at like CDs or some other fixed income type instrument, for example, short-term equity linked notes, where it's almost like cash equivalent, but the yield is much better. But in the meanwhile, you might have some exposure to risk. So overall, it's really depend on what kind of horizon, right, or how liquid you want your cash to be. Like if potentially you might need the cash or the money next day, then money market is your choice. If in 1 week or so, or some notes, some equity linked notes, might be your best choice. So it's really case by case.
Yeah, it depends on when you need money. Sometimes we don't know, right? So I tend to put a little bit of cash because I don't know, when the market is going to take a downturn, it's a good opportunity for us. So I'm a little bit speculative myself as well, right? Because if when you CD, you tied up, right, for 6 months or a year, right?
One thing I want to add is, CDs, there's some locking period, right? Like 3 months or 6 months. I will not call it a money market instrument, but nowadays there's some innovative products, which is actually some like index linked note, which means it's more like a bond, but you can liquidate the position in 3 days or 5 days notice period. That's pretty quick, right? And the yield is depending on what kind of underlying index you're gonna get exposure to, the yield can vary between like 7% even to up to like 13%, right? There are a lot of there's a good long list of this type of higher return but high risk money market instrument type of investment vehicle available out there in the market. I don't want to promote products that sold by my company. This is not proper venue to do that. But for folks who are interested in some liquid trading instrument, we can definitely talk offline, about that.
Yeah, no problem. So after that, if folks are interested, they can approach us. We'll give your information to them, and they can go directly to talk to you about your company products. Okay, and I want to understand as well. So that's very good. Okay, so the last thing for one more question is also for you. It sounds like people are always interested in stock market. Is should I get my son involved in stock market? He's 14 and very interested.
Is this a question for me?
For you, yeah.
Well, there's never too early, right? One of my friend, he set up an account for his son, who is 9 years old, right, to start trading stock, right? I think it's having your kids or children to start having some experience in an investment is always a good idea. And for them to know what is needed for making a smart trade, right? So yes, I think that's a very very good action for the parents to do. But if we want to like more specifically how we can make it like more constructive, right, for kids to develop a good sense of how to do trade. I think besides of having them trade on for their own, have on stock through their own account, you can always add some some coursework to the to-do list. For example, buying a few books on macro economy or economics, for them to understand what drives the price, right, up or down, and why certain monetary policy from the government or fiscal policy government gonna change the macro background of the market, and why some news happen to certain company drive up the stock price or drive down the stock price, right? So if we have all this kind of information available for our kids to understand all the real fundamental stuff of the market, I think that's gonna be much more constructive and productive for the kids, for the young generation to develop good sense of trading.
Okay. Sounds like those are also important for real estate, right?
Yeah.
Junying, understand the economic big environment before you buy homes, right?
Yes.
Okay.
And then can I put input one tip following the Harris tax defer?
Yeah, go ahead.
Yeah, if anyone have like investment property want to sell, yeah, please just not just sell. You can like do 1031 exchange to defer tax.
Okay.
Yeah.
So Kelly, you're familiar with, right? 1031.
That's right. Yes. Yeah,
Okay.
Yeah, 1031 exchange is, when you have an investment property and you're basically going to sell it, and then you can roll the proceeds into another investment property of equal or greater value, and then you can defer your tax. So like instead of paying tax on the gain of your first property, all the gain that you have plus all the principal that you have can go into the next property, and you can defer the tax until later.
Okay. But the handling, if we do 1031, handling this paperwork, it requires CPA to help out, right? Or special firm?
Well, the 1031, like you have to make sure you follow the rules, and then in your tax return, it requires a special handling of how you document everything, and then the backup needs to be there as well in case the IRS ever asks, is this a valid 1031 exchange? So it is a good idea to have an expert like a CPA look at it or do it for you. Yeah, but
Okay.
you can do it yourself, but it is not without risk. So yeah, getting an expert that understands it, has done many before, is a good idea.
Okay. So personally, I also want to say something. I borrowed money from all three vehicles. I borrowed against 401k. I forgot what I did. I bought something 401k, and I had a low rate I have to pay back. Okay. I also I did not borrow, actually, I should say. My relative and is borrowing money from life insurance and to purchase a home for cash purchase. Okay, it sounds like they don't need to incur much tax, because when you sell stocks you have to a lot of tax. So those two are borrowing. Okay, and I also borrow against home equity, so to purchase a different home, and so that's also not tax impacted. So all I'm saying, investment is great. When you have investment, you can borrow against it and pay a little bit back, and without incurring tax, right? Kelly, am I saying right?
Yeah, not only that.
Assets.
Yeah, not only that. When you borrow money, you do not pay tax on borrowed money, number one. Number two, if you borrow money and there's an interest rate that you have to pay for the borrowed money, and you're using the money for an investment, then you can actually deduct the interest as investment interest. So you can deduct the interest. So your interest rate is actually cut down if you're using it for investment purposes.
Okay, that's great. Okay, so we have a short meeting and sounds like investment is a very, very complex topic. And I could invite each one of you and spend maybe 2 to 3 hours and get into it. It's so complicated. So with all this, we just want to tell younger generation living in America, you need to invest because nobody can take care of you unless you take care of yourself. And that's how I look back. I've been in the country for 31 years. You have to take care of yourself from a long-term investment point of view, okay? You need to have assets that work for you, okay? Because life in America, it's unpredictable. You can be laid off. You can, there's something going to happen. So it's important you have investment. That's what I'm saying. I'm not here to promote, Mr. Tang, your crypto or stock, even though I'm very tempted to buy crypto at this price, okay? And tempted to sell S&P at this price, but you don't agree, so I'm not going to do that. But maybe I'll add a little bit of a crypto positions. Life insurance, I actually was in that quite a few years because I started for my kids and now for myself. I know it's very, very, very long term, but it has the benefit of tax-free and somebody's managing it and I don't have to worry about it. Real estate, for sure. A lot of us have a piece of real estate for our primary home or secondary investment home. But with all said, I just want to say, living in America, we need all. You allocate. I'm not talking about percentage here. Have a little bit of everything. Don't put the eggs, even though you love stock, love commodity, but Ms. Tang said it, don't put in one single thing. And it doesn't matter what investment we are doing, we need the Kelly, right? We need a good professional CPA. That's what I'm trying to say. Don't buy do tax yourself. You think it's cheaper, but the CPAs will give you great advice. And don't sell your home on yourself. And we need professionals like Junying because they know what they're doing. And if you buy insurance, have to go to a insurance agency. You cannot buy directly from insurance company. That's just the model. Find a good one, an educated one, somebody who cares about your interest above their own interest. Thank you all for your time. Sunday time in Asia and Saturday night in the US. Thank you all. And if you're interested, we're going to upload this Zoom information and contact us. We'll give the private information to all of you who are interested. Go directly talk to all the panel speakers. Thank you. Thank you.
Thank you, Dandan.
Thank you.
Yeah, thank you. Have a great night. Thank you, Mr. Tang. Yeah. Thank you, Geoffery and Kelly and Junying. Okay, have a great night, a great day. Talk to you soon. Okay,
Bye.
bye-bye. Bye.